Great way to start a presentation at 3%. So I'm going to have to try to make everything I can to change that. I'm obviously surprised by that analysis, because frankly, if there is an analogy that I can put together for investing today, and especially when I had a colleague from Gaffney Klein stand up and say 6 opportunities, I thought he was going to say China gas, China gas, China gas, China gas, China gas, and China gas. And he didn't say any of those words, and maybe that's why you're at 3%, but we'll fix that shortly. So China gas. I think I'd like to introduce a simple concept. I got to China 20 years ago. I've been on the ground a long time. Been doing the same thing for a very long time. We've been public for 10 years. I've participated and seen firsthand the massive growth China has gone through as an industrial nation and has become who it is today. But when we talk about China gas for a second, let me say that what China is transitioning through today is the same thing that those of you remember London being full of smog had to transition through. There's nothing unique about people make a lot of noise about China is polluted. I'd like you to name an industrial nation that wasn't polluted when it went through the kind of growth that China has gone through. So I think in China, what we are doing now is transitioning from coal over to a very clean source of energy, which is gas. And that's what my short presentation is going to focus on. I've got some very simple slides. It's a simple story. I don't need to have 35 PowerPoint presentations to make a point as simple as I've already made. So I've got 6 slides to go through. I hope there'll be a bit more questions so I can conclude that 3% investment in China needs to be 300% and not 3% by the time I get done. Most of what I'm going to share with you today, I think, is well known. 80% growth. It's a growth which was fueled by coal. Coal is basically in abundance in China. It was obvious for the Chinese government to use the resource that it's sitting on. But there are some important decisions that China has made. The choking effect of both the economy and the coal have converged. The local populace have stood up and say, enough. We want those blue skies back. And the government recognizes that. So a lot of the policies that are being implemented are all around keeping a plateau of coal production. Coal production will not go down. The volume of coal will be the same. The energy consumption overall will continue to rise. The delta in terms of the increase is going to be predominantly in the renewable sector and cleaner sectors, and gas is a big component of that. So gas consumption today is about less than 4%. You can kind of look at the numbers and say, what is it really? It's a very small single digit. It's about 4%. Call it 6 TCF a year. That's nothing for a company of China's size. But the expectation by 2020 is that number will be 20 TCF. Well, 20 TCF is about $200 billion of a market. That's a real market. 10% as a number might be very small. But 200 billion is not small. And we expect to be there between now and 2020. I really do like this particular slide to really get a simple point across. You take a country as small as the UK, compare it to the size of China. The energy consumption per individual in China is still very small. When you look at that for gas, we consume in China per person 1/10 of what a person in the UK consumes. Got a long way to go. And that small change is a material change. And that's the numbers that I've been focusing in on, as I said earlier, going from 6 to 20. These are, on a percentile basis, big changes, but in volumes, still relatively small. So 10% of the energy mix in 2020 is forecasted to come from natural gas. The political environment. I can spend a few minutes talking about the political environment. I got there in 1992. This is 2016. I've been through many government changes. and let me really focus the point, it's been transitioned from government to government in a very stable, consistent way. The policies are transparent. Everything is visible. As an investor, I've known from the beginning what my deal looks like. I'm not concerned about my transaction. We have not been concerned about our investments. The government policies were established when we first signed our contracts back in 1997. This is 2016. I have the same deal. Hasn't been renegotiated. We have the same concessions the government committed to. So when you take a look at natural gas, we've certainly had a lot of expert presenters, and I'm sure some of my colleagues will present later. One of the biggest things that investment needs is visibility. You've got to be able to look forward and say, we're deploying capital. We have a 10, 15, 20-year horizon. What does that world look like? Lots of forecasts get done, and we certainly had some presenters come up and say, and admitting, whatever we are forecasting will not happen. Well, the beautiful thing about China, what you forecast does happen from an investment perspective. Yes, the volumes have not been there, agreed. But we've been challenged technically. The company that I run, Green Dragon Gas, we are the pioneers of coal bed methane in China. We've been challenged technically in being able to desorb the gas from the coal, which I'll talk about a bit more. That was a challenge. But what was not a challenge was the government, the political stability, the policies, the rules of engagement. The comfort that we had on that side did not distract us from the technical job we had is to produce the gas. I think political stability is a big, big deal. It's a very big deal. And China certainly has that. And I'm a witness to that in real life, having experienced many turnovers since 1992. The aim that the government has established is not a new aim, to be quite candid. Our last 5-year plan, the objective was to get to 7%. We didn't get to 7%. We got to about 4.5%, 5%. The current objective is to get to 10%. But some of the reasons we're not hitting that threshold of getting to the right energy mix of 10% of the total energy demand is that the energy demand itself is going up. So yes, we've heard, and I read the FT when I'm in London more often than when I'm not in London, and there's all this thing about China's slowdown. China's slowdown of what? The country is growing at 6+%. People can argue, is it 8%? Let's just be even more conservative. Let's say it's 5%. It's still 5% on a much larger base of growth than it was 20 years ago when I got there. The growth continues. The growth will have and does have an energy demand, and it is driven and focused on natural gas. Renewables, yes, nuclear, solar, wind, etc. But natural gas is a key component of what the government is focused on. The prices are very stable. When we talk about government policy, the one thing we don't have to worry about, and I've really enjoyed the presentations today already, where we have lots of discussions about US gas, European gas, Russian gas, LNG prices, what the LNG prices will do, and things of that nature. Wonderful thing about being a domestic gas producer in China, it really doesn't matter to me. Brent, I'm concerned about my colleagues that are dealing with Brent and the LNG prices. We don't have to deal with them in domestic China. The Chinese government did a very important policy decision, which has been implemented since the beginning. Their view simply was the weighted average import price from all sources of gas, pipe, LNG, pipe and LNG predominantly, weighted average, that price delivered in Beijing is basically provided to a domestic gas producer like Green Dragon Gas. It becomes pretty simple. We know precisely what our pricing looks like. And what do we get paid at the wellhead today? In all this market, which is in a doom, we're still getting paid north of $10 an MCF at the wellhead. When our production cost is less than $2 an MCF, the government still gives us a subsidy on top, which is almost equal to $1 an MCF. That's government pricing. That's stability. That's consistency. So we're not worried about pricing. Take the LNG prices, drop them another 20%. Won't move our needle. We'll continue our investments the same way. the government, in essence, pays our lifting cost. All we've got to do is deal with our finding and development cost, and our net margin is very crystal clear. We can see it right up front. So as you can see, the government subsidy that I mentioned, this was put into policy in 1996. 20 years later, the government policy is exactly the same, regardless of the turnover that takes place from the government. I think that's a pretty important point. And that's what it's done relative to Brent, which is why we stand up and say, well, you know, people talk about global gas markets, and I know there's been a divergent view of will there be a global gas market or not. In my case, I have a simple view. I think that gas, and there was a great slide, in fact, if I may refer to a slide that one of the other earlier gentlemen put up. Great world map, lots of diamonds around the world. The diamonds were everywhere excepting where the big consumers of the next 20 years are. The next 20-year consumers are the emerging markets in Asia. That's where everyone wants to send this gas to. And there were no diamonds on that map centered around China, India, Malaysia, Indonesia, Vietnam, Thailand. I didn't see any big diamonds around of the big finds there. We're the importers. The consumers in Asia are looking for that consumption. But there is a key element. That consumption, in my view, is government-to-government transactions. And this is why I don't believe in a global gas market. I do think governments are transacting long-term contracts. And they're transacting on many different bases. They're not just transacting on a pure commercial basis. Yes, an IOC would like to get up and tell you how there's a global market and they'll be able to trade. My experience on the ground is governments make decisions for their national security interests. They make decisions for their independence. And those decisions are independent of market prices. Is there a bearing? Sure, there is a bearing. Is there a reference? There is a reference. But it is not the single driver of a transaction. So that trend right there shows what we've seen in China over this period of time. And as you can see, that price is driven from government policy. It's not driven from the market whatsoever. And that is realized price by us on the ground in central China. So Green Dragon Gas, we've been at it for 20 years in China exclusively. We're an exclusive coal bed methane explorer, developer, producer, and distributor in central China. That's where we operate. That's where we've exclusively operated. It's our 10th year since we've been listed here in the UK. We started off as a small-time explorer on AIM. We moved to the main market just over a year ago. Our focus today and our focus going forward, we've got about $1.3 billion US deployed in capital in developing the coal bed. So that's some significant capital with our partners that has been deployed on the 8 different blocks that we've got. 3 of them are commercially producing today. The balance 5 are in exploration stages. Our focus from this point is finally, we're past the investment cycle. We're on the returns. It's about monetizing our returns going forward. So we're pretty excited. I know it's kind of a doom environment out there with the commodity cycle, but for Green Dragon, it's certainly a very bright spot. 2016 is going to be our best financial year we've ever had, and we're pretty excited about where we sit today with over 2,000 wells in the ground, $1.3 billion of invested capital in the ground. All we're doing today is hooking up the wells, putting them on production, and monetizing our returns. So we're in a pretty much of a different environment. Our partners, very strong partners. Our direct partners that we work with is CNOOC, PetroChina, and CNPC. Those are our 3 partners that we work with on a daily basis. Just a couple last slides. I said I'll be very brief. If I can't make my point on simple, clean energy in China, I'm not sure I can make many points, so I'm going to keep it as simple as I can. I got asked a very interesting question by a media writer recently, and it kind of took me back and asked. And her question was, how relevant is this? So you produce this gas, so what? What does it mean? How many houses can it power? So that was an interesting number. To be quite honest, I didn't have the answer immediately. I had to take a step back. You normally think we produce so much BCF, that's very relevant. And it was a great question. And she said, why is it relevant? I mean, what do you do with it? So that's simply a chart talking about how much of a difference it does make if we're able to take 100% of our production capacity and simply power homes. How many homes could we power as we moved from our 2015 12 BCF to 16 BCF in 16? Our 2014 number was 8 BCF, so that's the rate we are growing. We're growing at between 30 to 50% per year, and we'll certainly keep on doing that in domestic production. So in conclusion, China is addressing the environment. It's addressing the environment not because it's under pressure from anyone externally. It's not because of COP21 or anything of that sort. China is addressing the environment because it wishes to for its own populace. It's very focused on it. And what's driving it is a great intersection. The coal production, and maybe I can just share a couple key numbers. The 2020 forecast for China is over 5 trillion tons of coal. Its current capacity is 5.7. In other words, if China simply wanted to fuel its economy, it can do so with coal, with the existing coal capacity, but it's not going to do so. It's got coal capped at 62% of the blend to 2020, and the increase is gas. And that is a voluntary decision that the government's made to actually clean up the environment. It's very focused on that. And we certainly live it every day. We see it every day. We've been to all parts of China that have gone from being blue sky to having issues, but those issues are going to get resolved. And it's the government's consistent policy that will make that happen. We're very comfortable with that. Domestic prices will stay stable. The government is very clear on that issue. 5 years ago, NDRC implemented a policy that gas prices domestically will rise by about 9% per year until they're at parity. I don't see the 9% rise today, but I do see the parity staying there. So that the $10 wellhead price, we're pretty comfortable, will stay going forward into the next 5-year plan. So that's all the way through 2020. It's very stable for a domestic producer. So all in all, I'm not sure why all of you want to invest only 3% of your capital in China. As far as I'm concerned, take all your money, consolidate it, go over to China and figure out a way to get in, or simply look at Green Dragon Gas, whichever choice you have. With that, I'll conclude my presentation, and hopefully I'll move the 3% at least to 3.5%. Thank you, Will.